How do you actually find these stocks every morning? When we built Scalp Radar, this was one of the biggest challenges we needed to accomplish. Because if you're scalping around in a stock that's not in play, you're exposing yourself to a tremendous amount of randomness. So each day in Scalp Radar, we select stocks that have a high probability of being in play, so that when people are using Scalp Radar, they're trading stocks in play. Those patterns have a higher probability of playing out simply because we're filtering out so much of the noise. If you don't have that, here's the beginner morning process, right? This is just a checklist. It's a morning routine checklist because the goal of the morning process is not to find every stock that's moving. The goal is to find the small number of stocks that most likely will produce clean, tradable opportunities. Here's the exact process you can follow, all right? Step 1, run a simple gap scanner. Look for stocks gapping up or down at least 3%, average daily volume over 2 million shares, and an ATR over 1, all right? That usually narrows the market to names that are moving enough, they're liquid enough, and have enough range to matter. You've already filtered your list way down. Step 2, read the morning news. All right, so the scanner is going to tell you what is moving. The news is going to tell you why it's moving. You're going to look for earnings. You're going to look for guidance. You're going to look for upgrades, downgrades, FDA news, M&A, lawsuits, contract wins, regulatory headlines, maybe even major macro headlines. What you're looking for in steps 1 and steps 2 is what are the names that I'm observing on my gap scanner that are having a lot of headlines today. Guess what? If things are gapping and they have really good headlines that other people are paying attention to, they're more likely to pay attention to the stock and it's more likely to be in play. Step 3, you're going to prioritize earnings during earnings season. Earnings can create some of the cleanest stocks in play because the company's just given the market brand new information. If a name's traded 20% of its average daily volume before the open, it's worth attention. If it's traded 50% or 70% of its average daily volume in pre-market before the open, it's completely worth watching. Sometimes they've even traded 100% or more before the open. That's rare and it really deserves a lot of study. Step 4, you're going to check that pre-market volume and the relative volume. This is where the participation confirms the story. 10% of the average daily volume in pre-market can kind of signal a potential trend day. That's all you need, 10% of the average daily volume. 30% of the average daily volume in the first 10 minutes is a strong sign the stock is truly in play. Now, funny enough, this works better in futures than it does in equity. If you are using futures or a futures trader, you really want to pay attention to the pre-market volume because on trending days in the market, they will have far more volume in the pre-market than they will on a non-trending day. It's really fascinating. So for all you futures traders out there, it's a really good thing to use. We're to step 5. This is where you're going to validate the higher time frame chart because that gap isn't enough, right? You're going to look at the daily, hourly, and 15-minute chart, and you're going to identify, is there a clean level? Is it breaking out? Is it breaking down? Is it failing at resistance? Is it gapping right into a resistance? Is it clearing out of a base? Is it holding above a prior high? If the stock's gapping into a messy chart with no clear level, you're going to downgrade that instantly because there's confusion. You don't want to be caught in the confusion. Step 6 is something a lot of people miss. You actually want to rerun a scanner in the middle of the day. About a quarter of the time that we're trading, 252 trading days in the year, right? About 50 trading days a year or 60 trading days a year, some stocks become more in play after the market opens. And at that point, you're going to look for stocks that have already done a multiple of their average daily volume, right? So you're going to be looking, a simple scanner is what at 12 o'clock or 11 o'clock, 11:30, whatever time you want to run it, what stocks have already traded more volume that they trade on an entire average day. Okay, what stocks are trading more than an ATR, more than their average true range? The stocks that are doing that already are showing you there's participation. They're showing you that there's opportunity there into the afternoon or into the middle of the day even. When everybody else is saying, I don't want to trade because I don't want to get chopped up in the randomness,